Hey, what is going on, everybody? Welcome back to the channel all about real estate. My name is Lewis. If you are meeting me for the first time, we talk all things finance and real estate, and it has been at least 3 weeks since my last video. If you notice the background here, we are in a new office, so I relocated offices, took a vacation, spent a lot of time with the family. We had the 4th of July, so we've had some holidays, and I am now just getting back into the swing of it. Truth be told, I took off a little more time than I thought I actually would before coming back on here to make some videos. But we have a very interesting Sacramento market update because all of the data is out for June now, and it is preliminary data. However, the trend continues. Inventory is increasing, and there is a lot of stuff that has happened here over the last few weeks in the market. So I want to go over those with you here today. I'm going to go through all of the stats and facts here in Sacramento and give you my opinion on the market, or at least give you a pulse on what we're seeing as far as boots on the ground are concerned. So without further ado, if you wouldn't mind hitting that like button and that subscribe button if you're new to the channel, and we'll get right to the details. Let's go. All right, here. So up on the screen, I have the data for the Sacramento region. Now this is going to be Sacramento, Placer, and El Dorado County, all single family homes. So on this chart, the light green bar is going to represent the number of homes listed for sale. That's your actual housing inventory. The dark green bar here is going to be the number of units or homes sold, and the red line is the indication of homes that were put under contract or are pending. So this is really fascinating what's going on here. So as far as the month of June goes, you can see a major explosion here in the number of homes listed for sale. So your inventory is actually up 33.3% month over month. It's up 98% year over year. So inventory has doubled from this time last year, and this is a trend that we have seen continuing over the last few months. In fact, if you go back to January of this year, we had just 1,109 units for sale. It has gone up every single month. It's up 300% just from the start of the year. So this is a really interesting trend. Now in the Sacramento region, this still represents less than 3 months worth of inventory, and we'll talk about that here in just a minute or two. But it's just moving us back into what we would consider a more balanced market. So this is not the greatest trend. We don't necessarily want to see this if we are sellers, but the inventory still is the inventory is still low, relatively speaking. Well, the number of sold homes is down about 28% year over year. It's down 0.7% month over month. That's pretty trivial in my opinion. Number of homes that have actually been put under contract, that is down about nearly 30% year over year, and it's down about 13.2% month over month. So this actual sales activity is slowing down. So I think a case could be made as to the reason why this is starting to unfold is because we've obviously seen interest rates spike pretty dramatically here over the last 3 months. The Fed has raised the federal funds rate up pretty significantly here at the last couple of meetings, and I think a lot of folks are concerned that we are headed into recession. So some of the buyer demand has fallen off. And so these are not necessarily just new listings. They're listings that are sitting a little bit longer. And then as new listings hit the market, it's expanding the inventory. We're just not seeing homes move quite as quickly. All right. And then moving on to the next chart, this is one of my favorite metrics to measure value in the marketplace because it gives you a good barometer of what a property is valued at based on its square footage. So this is the average price per square foot. You can see that we are at $352 per square foot for the month of June. Now, it was actually higher in prior months. So in April, we saw $360 a foot. In May, we saw $359 a foot. So it looks like it's evening out and even coming down a little bit. Year over year, we're still up 9.7%. So homes are still elevated from where they were a year ago. This would be not necessarily deflation, it's sort of disinflation, meaning just homes are going up, they're just not going up quite as quickly at this point. All right, and that brings us to the next chart, which represents the average amount of days on market and what the homes are selling for compared to the original list price. So this orange bar here says that on average, homes are taking about 16 days to sell or put under contract. So that's still less than 3 weeks. That's that means that inventory is moving still very, very quickly. So if you're priced correctly and you're positioned properly in this market, the home is still going to sell. There still is buyer demand. So it's really important to keep that perspective and look at the data like these charts, because lots of folks think that the market is just crashing right now, which is absolutely not true, at least according to the data. Now, the trend, if it continues this way or gets worse, you could make a case for prices being lower potentially in the future, or us seeing some more downward pressure on pricing. And that's going to be a function of where interest rates go. It's going to be a function of the economy. And so there's still a lot of moving parts there that may or may not cause prices to either move up or down from here. But as far as the data is concerned, homes are still selling, albeit they are moving a little bit slower than the prior months. And if you look at this green line here, you can see that homes are selling for about 99% of the original list price, which means the market temperature is changing just a little bit. Homes are not selling above ask like they were in prior months. You can see here 102%, 103%, 103, 102. And this simply means that buyers are able to negotiate a little bit more with the sellers in this type of environment. Now, months worth of inventory. So generally speaking, anything less than 3 months is still going to be what we would consider a seller's market. 3 to 6 months will be neutral, and anything over 6 months is going to be more of a buyer's market. Now, if you look at June, you can see that we have 1.7 months worth of inventory. This is certainly the highest we have had in over a year. It's probably been a couple years since we've seen inventory at those levels there. I would imagine somewhere around March of 2020, we saw inventory spike like this right as the pandemic was hitting. But year over year, you can see that we're up about 176%. Month over month, we're up about 31% as far as inventory is concerned. And if you go back just to the beginning of the year, we had less than a month, and you can see this big spike here in inventory. So we'll have to see if this trend continues. If it does, and we reach more of a 3 to 5 month level of inventory, well, we're definitely going to be in what we would consider a more neutral, or a even kind of moving into that buyer's market area where they're going to have a little bit more negotiating power than they did over the last few years. That is for sure. And we are already starting to see that now. Now, before we wrap up the video and I give you some of my personal thoughts on the market, I did want to share something really fascinating here with you. So up on the screen, I have redfin.com, and I have selected Placer, El Dorado, and Sacramento County, which is the same areas that we were just discussing with all of that data there a second ago. Now, I have selected only single family homes that are listed for sale in the area, and I want you to pay close attention to a couple things here. So if you look at the screen, there is a total of 4,376 homes that are listed for sale. And I want to give you an idea on the number of price reductions that we have seen just over the last 30 days. So if you click on the price reduced tab here, and we select in the last 30 days, 1,640 of those single family listings here in the area have seen price reductions in the last 30 days. That makes up about 38% of overall listing activity. All right, so there you have it. That is the information and data that just came out for the month of June. And of course, I mentioned that I wanted to share some of my personal thoughts on the market and what I'm just starting to see locally here sort of pan out as boots on the ground. So a couple things here. Number one, inventory is certainly skyrocketing. We have seen a pretty big increase in the level of homes that are listed for sale. I think some of those homes are actually just sitting a little bit longer. They're not moving as quickly, which means as they sit and more inventory comes onto the market, it sort of inflates that number. We're still under 3 months worth of inventory. So by all sort of accounts and measures, this is still a seller's market. We are starting to see buyer demand fall off a little bit, and a big portion of that has to do with the higher mortgage rates at this time. Now, in addition to that, we are seeing a lot of price reductions. 38% of all listings is actually a decent number, but there are some cases to be made that those properties that are seeing those price reductions were not priced properly to begin with. Some sellers may have been a little overzealous in what they felt their home is worth. They punched it out at a high price, understanding that the market was so red hot that they might get someone coming in that was willing to pay that premium for that property. Well, they are quickly finding out that with the higher rates, the market temperature is changing a little bit, and they're having to come back down and have their property priced according to the stats and facts here in the market. So now on the buyer side, folks that have been waiting for months and months and months, or they've been trying for the last year or two to purchase property, now is a really, really good time to get out there and make some offers. Interest rates have gone up, but they have seen a little bit of reprieve as of late. We're starting to see rates that are in the lower 5% range again, low to mid fives, depending on how you qualify, even lower if they are government products. So FHA and VA, there may be a good opportunity there. But as far as that goes, it is certainly still a strong market. At least that's what the data is showing us. We're going to have to continue to monitor this. And as always, personal finance is personal. So whether you are buying or selling in this market, make sure it is for the right reasons. Make sure it's for property that you intend to hold on to for a long time, and make sure that it fits your budget today, because as the market or economy changes, some of those unknowns, like, are we headed into a recession? Is the job market or labor market going to get a little tighter? Is the stock market going to continue to see sell-offs? Things like that. Or do we have a long enough financial runway? Some of those things we really want to pay attention to and be cognizant of, so that we can make the best decisions for ourselves. So with that, it is great to be back and great to be making these videos again. I may need to cut it back to a couple days a week. I was trying to do one every day. Now that we're kind of in the middle of summer and we're spending more time with the family and work is picking up, I think I may need to back that off a little bit, but we'll see what we can do. So anyway, I really appreciate you guys. Hit that thumbs up if you haven't done so already. Tap the subscribe button. We'll see you next time. Thank you.